You sit down to file your taxes. You remember you worked from home all year, and you think, perfect, I'll claim the home office deduction and finally get something back for the space I'm paying for. Then you hear a horror story from a friend who got their claim denied because the office was a laptop on the kitchen table, and suddenly you're wondering whether the deduction is a smart move or a trap that turns your return into a neon sign. My name is Hector, and I break tax rules down into real-world steps that keep you compliant and keep more money in your pocket. Because the home office deduction is one of those tax breaks that sounds simple, but it's full of small requirements that decide whether your claim is clean and defensible or whether it collapses the moment someone asks one follow-up question. If you get it right, it can legitimately reduce your taxable income, and if you get it wrong, you can lose the deduction, pay extra tax, and spend weeks proving you weren't trying to be clever. Stay until the end, because I'll give you a simple, audit-proof checklist you can run in 2 minutes, and it will tell you whether you should claim it, which method to use, and what to document so you're not guessing later. First, you need to understand the single rule that decides almost everything, and it's the one people try to wiggle around because it feels strict. In the US, for most people who qualify, your home office space generally has to be used regularly and exclusively for business, which means it can't be your office by day and a guest room by night if you want a clean claim, and it definitely can't be a shared family space where business happens sometime. The point is that the tax authority is giving you a benefit for dedicating part of your home to business, and they want that dedication to be real, not vibes. Now notice the word qualify, because not everyone can claim this in the first place. In the US, the home office deduction is generally framed for self-employed people, partners, and certain business uses of the home, which is why the IRS guidance constantly talks about claiming it with business income reporting. If you're a regular employee working remotely, the better instinct is to think reimbursement policy rather than deduction, because many employee job expenses have not been deductible in the same way during recent years, and you do not want to build your plan on a deduction you cannot actually take. If you want more videos that keep you out of these sounds easy but gets messy tax situations, subscribing makes sense, because this channel is basically a map of the most common audit traps and the clean ways to avoid them. Next, you need the second qualifying idea that people skip, which is the why here test. In the US, your home office typically needs to be your principal place of business, or a place where you regularly meet clients or customers, or a location used for specific qualified purposes, which means the claim is strongest when your home office is truly central to how you earn. If you have a separate office outside the home where you normally do your work, claiming a home office can be much harder to defend because the obvious question becomes, if you have an office, why is the home office necessary? So here's the practical way to do the qualifying step without overthinking it. You pick the specific area you want to claim, and you ask yourself, if someone visited my home, would they instantly understand that this area is a business-only workspace? And could I explain why this is where I actually run the business? If the answer is yes, you're moving in the right direction. And if the answer is well, kind of, you either tighten the setup or you skip the deduction. Because the fastest way to lose money is to claim something you cannot defend. Now let's bring in the UK and Europe viewers, because the language is similar but the mechanics are different. In the UK, employees who have to work from home may be able to claim tax relief for additional household costs. But HMRC is very clear that it's not for people who simply choose to work from home, and it's not for general mixed-use costs like rent or broadband. That means the UK version is less about carving out a room for a business deduction and more about claiming specific additional costs tied to working at home under the rules. Once you've cleared the do I qualify hurdle, you've got the next decision. And this is where people either keep it simple or accidentally create paperwork misery. In the US, you typically choose between a simplified method and an actual expense method. The simplified method is exactly what it sounds like, because you multiply a prescribed rate by your office square footage up to a maximum square footage cap, and it dramatically reduces record keeping. The actual method can produce a larger deduction in some situations, but it requires you to allocate home expenses between personal and business use, which means you need better records and a clearer calculation. Here's how to choose without guessing. If your home office is modest in size, your home expenses are not unusually high, and you want the safest, lowest hassle approach, the simplified method is often the cleanest starting point. If you have a larger dedicated office, high housing costs, or you did major home-related expenses that genuinely support the business use, the actual method might save more, but only if you are willing to document it properly and keep the calculation consistent year after year. In the UK, if you're self-employed, you can often choose a simplified expenses approach for working from home based on the hours you work at home each month, which is designed to avoid complex apportionment calculations. If you're an employee, there's also a straightforward weekly amount you can use for tax relief in the right situations, and you can sometimes claim the exact additional costs instead, but then you must be able to evidence them. Now we get to the part that most people mess up, which is what you can claim and how you should think about it. In the US actual method, there's a very useful distinction between direct expenses and indirect expenses. Direct expenses are costs that apply only to the business space, like painting the office walls or repairing a window in the office. And those are generally easier to justify because they're clearly business related. Indirect expenses are the shared costs of running the home, like utilities, rent, insurance, and certain repairs. And those are typically allocated based on the percentage of the home used for business, which is why measuring your office area and your home's total area matters. In the UK employee world, HMRC's language is basically telling you, don't try to claim your life, which is why they emphasize that you can claim things to do with your work, like business phone calls and increased gas or electricity for your work area, while explicitly saying you generally cannot claim mixed-use costs like rent or broadband. That's a big deal, because a lot of people assume I worked from home means I claim my internet, and HMRC is basically saying that's not how it works unless you can clearly separate the business-only portion and you're claiming actual additional costs under the rules. If this is clearing things up, hit like, because it helps more people find the accurate explanation instead of the viral version that turns tax into a guessing game. Now let's make this real with a simple example, because examples are how you stop making mistakes. Imagine you're self-employed. You have a 2-bedroom apartment, and 1 bedroom is a dedicated office with your desk, your equipment, your filing, and nothing personal. If that room is used regularly for work and it's not doubling as a guest room, you have a clean story. If you then measure the space and choose the simplified method, your documentation burden is light, because your proof is basically the exclusivity, the regular use, and the square footage calculation. Now imagine the same apartment, but the office is a corner of the living room that also has the TV, the couch, and the dining table. And the reason that's dangerous is that even if you genuinely do work there, it's hard to argue exclusive business use with a straight face. That doesn't mean you're a bad person. It just means the deduction is designed for a dedicated space. And trying to force it is how people end up stressed. So what should you document so you're not scrambling later? You want 3 kinds of proof, and you can keep it simple. First, you want proof of the space, which means a rough floor plan, a measurement, and a note of how you calculated business percentage if you use the actual method. Second, you want proof of exclusive use, which can be as basic as a few dated photos showing the office setup, because that's often enough to show it's a real workspace. Third, you want proof of the expenses you allocated, which means keeping your bills in a folder so you can show the numbers you used if anyone asks. If you're using the simplified method in the US, you still want the proof of exclusivity and the square footage, because simplified is not no rules, it's just simpler math. If you're using the UK employee relief, you want proof that you had to work from home under the criteria and that you didn't get reimbursed for the same costs, because double dipping is the kind of thing that becomes an easy repayment demand later. Now for the mistake list, because avoiding mistakes is where most of the money is. The first mistake is claiming a space that isn't exclusive, because that's the most common reason home office claims fall apart. The second mistake is mixing up I worked from home with I qualify, because eligibility depends on your status and the rules in your country, not just your laptop location. The third mistake is overstating the space, because claiming an unrealistic percentage of your home invites questions, and questions are where people lose time and peace of mind. The fourth mistake is being inconsistent, because if you change methods or percentages every year in ways that conveniently increase the deduction, you're creating the kind of pattern that auditors love to examine. So here's the 2-minute audit-proof checklist I promised, and it's the one you run before you claim anything. You confirm that the space is used regularly and exclusively for business, and you make sure it looks that way in real life. You confirm that your home office is legitimately central to the business, either as the principal place you run it or a place you meet clients when that applies. You choose the method that matches your reality, meaning simplified if you want low hassle, and actual only if you can document and allocate confidently. You save a small bundle of proof, which is measurements, a couple of photos, and the relevant bills or the logic for your flat rate claim. If you want, I have a one-page home office deduction cheat sheet that includes a measurement template, a photo checklist, and a which method should I use decision box that makes the choice obvious. And you can drop it into your tax folder so next year you're not reinventing the wheel while the filing deadline creeps up. Because the real win with the home office deduction is not squeezing out every possible penny this year. It's building a clean claim you can repeat without stress. So you keep the savings, you keep the compliance, and you never have to gamble your return on a space that doesn't pass the walk into the room and instantly know what it is test. Which is exactly how you stay on the right side of the line while still claiming what you're genuinely entitled to claim. Starting with the one decision that makes everything else easier, which is setting up a space that is actually a business space, and then documenting it once so you can stop thinking about it and get back to earning. References for accuracy, not for voiceover. IRS Publication 587 and IRS Guidance on the Simplified Home Office Method, HMRC Guidance on Working from Home Tax Relief for Employees and Simplified Expenses for the Self-Employed.